Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday market webcast. Okay, daily chart, and we talked yesterday, the bears were in a position to test the 20-day simple moving average. They did that, and they broke it. We're down around the 100-day now in the 50. So we've talked for a decade now about how the E-mini likes to trade with regard to Bollinger Bands. Upper band, middle band, lower band, middle band, upper band. You got a Fed meeting on the 14th. I'm looking at the lower band here, the lower Bollinger Band down at 38.48. You got the last FOMC price down at 38.52. I'm not saying it's going there. I'm saying there's a case that can be made for it to continue to bleed down a little bit. That's going to have everything to do with PPI tomorrow morning and then CPI on the 13th, Fed meeting on the 14th. So there are some potential, I'm sorry, PPI is on Friday, not Thursday. That's going to have everything to do with these news points because you could absolutely send it the other way. And if inflation has cooled even a bit, it will. But if we continue to bleed as we have for the last 4 going into 5 sessions, that lower band begins to loom pretty large. Now, it'll tighten up because we did all this consolidation back here in the back half, rather than the middle half, the middle part of November. So these bands are going to tighten up as we go, unless you really get some kind of an outlier. But you know, I was speaking to a friend of mine yesterday, and there's just not a lot of panic in this tape. It's been very orderly. It's been very, you know, and you could say that about today. You could say that really about the whole year. Aside from the few minutes after, you know, a couple of CPI reports that kind of, you know, acted as reality checks, I guess, for all of us, and you were seeing 100, 120, 130 handle, you know, 1, 2, 3 minute candles. It's just kind of been, it's been a grind up and it's been a grind down. Very orderly. You have not seen the kind of, oh my God, get me out stuff that you have seen in years past, whether that was COVID, whether that was the housing crisis, whether that was Lehman, you know, things like that, you know, TARP. We haven't had that kind of stuff. It's just been, okay, well, I'm not buying anything today, and I'm getting out of stuff, and we're just going to continue to roll down. Yesterday was your classic trend down day, solid day for the room. Hourly chart, you can see it's just we're just stepping down and stepping down. We took out the lows from last Wednesday when Powell popped it on some of his remarks. Those are the Powell remarks right there. We have taken that out, so that's been completely round tripped. So now you start to look at. You zoom out one. Well, it's more evident, I guess, on the daily chart. So now we got to go back. That's fine. You start to look at some of these potential, you know, and they still are. They're higher lows relative to that 3502 back on October the 13th. Right here, November 3rd is a key area. 3704. You know, 3751. Those are well below where we are trading now. I'm not going to go through my rant on targets. Targets are idiotic. So are 99.9% of swing trades. So if you're some swing trade position trader going, oh, Princeton Trader, Mike's calling a target 37.50. Oh my God, it's time. No, that's not what I'm saying. I'm saying there are prices here that the bears are going to have to achieve if they really want to get what they want. And the lowest probability outcome on the entire board is that you get this moon crashes into the earth, Wile E. Coyote off the cliff, and we go down forever kind of a thing. Good luck, okay? Don't forget, on the stuff that we use in the room, there's still an open number down at 663, okay, from back in 2009, all right? Whatever. Focus on the 10 handles in front of you, and the rest will happen. Oh, and there's an open gap from like New Year's Eve into the new year, like 2012 or something like that. Yeah, okay. Yeah, go light a candle on that. You've got volume weighted average price 39.43 and change. Hourly mid-band is sitting at 39.44. So the thing about this hourly chart is the hourly mid-band, we talked about it yesterday. With the exception of a little bit Sunday night, resistance. This is when we talked yesterday morning. This is when we talked. They couldn't take it out. Little bump here. They can't take it out. If we're living below the hourly mid-band, the bears will retain short-term tape control. bottom line. So things that you can apply from watching this to your trading, even if you're not, in my opinion, wise enough to come and hang out in the room and do what we're doing all day, stuff like that. So that's up at 39.44. So until the bulls can take out and convert 39.44, you're going to see more of the same. All right. Everybody have a great day. Be safe. Be healthy. Take care. Trade them well. Don't do ridiculous position trades on targets. And I will check you guys out tomorrow. Be good.